Hi folks, it's Doc Severson for the TheoTrade report for the last day of January, January 31st, 2017. Well, the earnings bonanza continues, and this is Apple after hours here. So they've just released, and we started from a price point at about 121.3. We had a 4.5 point expected move, and look at this. It's come straight up to that expected move level of about 125. Now, a lot can happen between now and the end of the week. So that 4.5 point expected move was into the end of the week. So, of course, we're just going to pin it straight up to there. But you never know what's going to happen with these things. A lot of times by the morning, a lot of this is reversed, or sometimes we have these going even further. So more than one standard deviation move in the course of just overnight. So actually what Don set up in the room today was a long iron Condor. So this is exactly the opposite of what everybody's used to seeing is, an iron Condor that looks like this. And this is the traditional approach to setting an earnings trade, is that people think that the price will generally stay within one standard deviation move and set up the wings out there. Unfortunately, to do that, you have to set it up for less than a 1-to-1 reward to risk to accomplish that. So what that typically means is that, you can generally earn okay on several announcements where the price will kind of stay in a muted fashion. And then you get the widow makers that are out there that just blow straight through there and have a 3 standard deviation move. So let's zoom out here and look at Apple just from a monthly, weekly, daily perspective on this. So we can see that, yes, we've had an uptrend. We're in the midst of an uptrend breaking above this kind of large flag pattern here. You can see that large flag pattern. They're breaking out. Nice weekly uptrend going up here. And we might not see a whole lot of upside past this. So if we do see this continuing from tomorrow morning into the end of this week, it's probably going to stall out at this level. So breaking up to 125 or so is going to bring this back down to here again. And what I would expect to see from Apple is perhaps the next consolidation zone up here, or maybe even a pullback similar to what we've seen recently like this. Now, the next one to step up to the confessional is Facebook. I believe Facebook is tomorrow evening after hours. So you can see for Facebook here in the NASDAQ site, we are looking for a consensus of about $1.13 tomorrow after market. That's as high as $1.35, low of $1.02. And we can see the trend in the earnings per share to this point over the last year. So we had last year in 2016, first quarter was 52 cents earnings per share. Then it went up to 71 cents earnings per share in June, then 82. So you can see that $1.13, a little bit of a stretch, but some calling for as much as $1.35. So Facebook, this should be a huge quarter. If it's not, this will take the market down because I think a lot is really resting on the hopes that Facebook has found a way to create revenue and create that hockey stick growth to the upside. But overall, looking at the S&P here, we're really into the same kind of market that we saw after the Brexit move. This is really not all that different. We've really seen the same thing, is that the highs are not being bought, but the dips are. The highs are not being bought, so the dips are. So this is what we typically see from something like this. When the market goes up to an all-time high at that point, what is required to get into all-time highs is stoking up the negativity, which then gets flushed out. So we can see this happening over and over again, having that negativity get stoked up, and that creates some kind of event which causes the shorts to cover. And we see this again and again and again. So that's really no way to create, massive moves to the upside. If anything, it's going to be a very grinding move. But most of this move that we've seen since we changed character in late June of 2016 to now, most of this has occurred in just a few days each time. Each one of these moves, the bulk of the moves, has occurred in just a few trading days. So right now the market's perfectly willing to just sit there and coil sideways and really go nowhere and just drive everybody nuts, and then just sit there and wait for a catalyst. Wait for a catalyst that's going to either push things down to the next dip, or wait for a catalyst that's going to push things higher based on growth expectations. So right now, the only game in town is earnings. I think quite honestly that everybody thought by this point that Trump would be twittering the market to death, but so far that has really not occurred. Any tweets that have been received by the market have generally been positive, and this is what led to last week's little spike, which was unsustainable. We've come back down again, but this is not selling. This is not selling what we're seeing here. Now, this is selling. What we saw in January of last year was selling, or that was August. That was the August 2015 move, the January 2016 move. Those were legitimate selling pressures that we had coming into the market, legitimate distribution. Right now, we're not seeing anything that resembles distribution. Right now, we're in a quiet and trending bull until further notice. And the further notice that we'll get will be that shot over the bow where we start to move in a big, big way, indicating that we're going to be trading into a bigger range. That's all it means for right now. All right, folks, that is it for tonight's report. Thanks for listening. We'll see you tomorrow.